thanks for coming to my market report. I'm Mike, and this is a daily market report that I create on a daily basis for mortgage rates. So if you're interested in learning what driving mortgage rates on a daily basis, you come to the right place. A little bit about myself. I do work as a loan originator for a national lender. So if you got questions about mortgages or interest rates or looking at refinancing or purchasing, please feel free to reach out anytime. We'd be more than happy to discuss your scenarios and answer any questions you might have about the process. Today, it happened to be March 29th, 2021. We have no economic reports to report today. However, later this week, we will see the big reports will be coming out on jobs data for the month of March. So as we go into April, we'll have on Wednesday, it should be the ADP numbers, and then of course we get every week the Thursday jobless claims, and then the Bureau of Labor Statistics release their data for the month of March on Friday. So let's jump ahead, see what's really impacting the markets today on the headline news. Stocks a little mixed. They were, for the most part, actually in negative territory because there was a big, large market shift earlier today. We had a big hedge fund company that dropped about, was it $30 billion of stocks, and it looked like it had some. So they're still kind of researching what's going on here, but it happened and what sectors it's going to affect. So there's a lot of other hedge fund companies are rebalancing. We expect this to happen even tomorrow because we got a quarter end. So we'll have we could see some shifts, but that was kind of a major shift that they weren't expecting to happen. Some of it seems to be that they had some margin calls and they had to create some liquidity, but again, they're still not clear exactly what happened. But again, that $30 billion worth of assets being sold off is quite large, and that's kind of what disrupted the markets earlier today. As a result, so let's go take a look at what's driving mortgage rates. We started the morning up well. We started way up here, but however, since all that started happening, and then now stocks are kind of regaining some balance, going back into positive territory, mortgage-backed securities have been losing ground. It's been dropping further. We're down about 14 basis points from yesterday, and as you can see here, we're way up here, and then from here, this is 14 basis points from here. So we had a pretty big loss. So lenders are putting themselves in the position to reprice for the worst today. So again, stay tuned. We could see some choppiness today and even tomorrow, and probably even Thursday for that matter, with some rollover effects. As treasuries, it's rolling up even higher. We're going up to the 1.71 now. We're trying to keep away from this lid here. We were trying to keep below this, but unfortunately, late in the week, it did break above that level on Thursday. So it looked like we were kind of getting some steam, but however, that got kind of quickly deflated, and now we're kind of working our way upwards again. So anyways, again, mortgage rates are looking a little bit worse today than what we saw on Friday as the day is progressing. We'll have to kind of watch and see if this continues, as we'll expect to see some choppiness in the markets today and tomorrow due to repositioning, rebalancing this quarter end. A lot of hedge fund companies will want to reposition where they're at with the current market situation. All right, folks, I hope you guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye-bye.